Welcome back to Everything Money. As always, we're here with Seth, Paul, and Tim. Not Tim, with Mo. Why did I say that, Mo? You know I love you over there doing the research on your trading. Today, we're talking about the housing market. What a wild ride we've been going on. Houses, obscene prices, same-day bids, asking prices versus over prices. It's just absurd. I deal with a lot of wedding folks, Paul. Obviously, I'm a wedding photographer in my spare time, and I see young couples getting into houses, and it's just been obscene of late. And I worry, Paul, because I've bought a couple houses. I'm a little older. You've bought thousands of houses and units of real estate, and you've seen what can happen when we're overpaying on properties. So if you're watching this and you're thinking about buying a new home, or you just got into a home, we want to give you some ideas to think about, not only about just not just living in your house, but what you paid, what you might be about to pay, and what that could turn into years from now. Paul, tell us about your mindset about real estate and in a market like this.
So when I hear people say real estate, I immediately think owning an apartment building for investment.
Okay.
But a lot of people say, no, include my house. I do not include somebody's house as a real estate investment. Is it a real estate investment? Absolutely. Mm-hmm. But you still need to live somewhere, right? So whenever people tell me, hey, I want to buy a house right now, first thing I say is why? If it's because the housing market's going crazy and I love it, I'd say just stop. Don't even think about doing it. Why? Because it's going crazy and you will not love it. Here's an example. This is the Schiller Index since 1988, showing national housing prices. This is where everybody thought that houses were the best thing ever. Here's where it bottomed out at, 28% lower in general for the entire country. And now it's gone up to pretty much double, almost. So it seems exciting, then collapsed, doesn't seem exciting anymore. Nobody was talking about owning homes here, and then all of a sudden it rebounds. This is part of the cycle of any sort of investment. Now, if your answer to my question is, well, we don't have enough space, our family's growing, etc., and we plan on living there for a long period of time, I tell people, then don't worry. Mm-hmm. As long as you're okay sitting there realizing your house might go down in value over the short run, if you're in it for the long haul, even if you sell your house 30 years from now for exactly what you paid, but put a reasonable 10 or 20% down payment and just pay off the mortgage over 30 years, you can still get a good return on your money. Tim over here, Tim, you mind if I'm open about what you just did?
Sure.
Tim just bought a new house. He paid over ask price, but he plans on being in this house for a long time, and it's a very dated home. He plans on renovating, so he can get a lot of value out of doing that. Based on the comps in his neighborhood, he could still make money putting a lot of money in his home. So every situation is different. But if you just want to buy a home because the market's hot and going crazy, you need to be very cautious about things. One of the most important attributes for any sort of home value I always look at is your price to income ratio, right? If you think about it naturally, if incomes go up, are you willing to pay more or less for a home over long periods of time? More. So you want to look at how much is income going up and how much is price in the area going up. Harvard has a website. In this website, they have the income ratios across different markets in this country. Obviously, very expensive. How much, you ask? So in these areas, it's upwards of over, I think San Francisco actually has 11 times.
Wow.
11 times ratio, which means if the average income in the area is $100,000 a year, the average home is $1.1 million a year.
Jeez.
$1.1 million to buy the average home.
Jeez.
Can you imagine that? That sounds ridiculous, but over there, they think that's normal. In Ohio, it's something like 3.5 times. So if you make $100,000, the average home is $350,000. Okay, a lot more reasonable. Now, I believe in this because I believe income drives everything we do in life. Income drives how much you pay for things, why you buy things, when you buy things, etc. Right? So at the end of the day, it's all about these ratios that make sense to me. The more crazy the ratio gets, the more likely there is to be a pullback of some sort. When, how, I have no idea. But even if you look at these, look at San Francisco right here. Look at this chart. Even this ratio went from 11 down to 6 or 7. It fell in half during the housing crash of 2008. Everybody thought, no way would it drop this much. Look at Arizona. Look at the Tucson area or whatever, Arizona right here. This ratio dropped 30, 40%. Same thing here. It's all about what income is driving. The more crazy the income ratio gets, the more the downside might be. So I always tell people, urge caution. When do I think a crash will happen? Mo, when do you think a crash will happen?
I have no idea.
We have no idea. There could very well never be a crash.
Yeah.
Interest rates are very low right now, but interest rates being low is kind of perpetuating this whole drive up in prices. Like literally, I had a mutual friend of ours who went to high school with us listed another friend of ours' house. I called him and said, how's it going? He's like, oh, terrible. We haven't gotten an offer yet. I'm lowering the price. I'm like, didn't you just list it? He's like, Paul, in this market, 2 weeks is too long.
Yes.
Wow.
Oh, absolutely.
He's like, if I haven't sold in 2 weeks, my price is too
absolutely.
high.
If I see it for sale in the yard, I'm wondering the price must be.
Yeah, there's a lot of homes that I'm seeing out there. That there was one right across the street from your brother where before it went on the market, it had an overpriced offer. And that is an expensive home.
I just sold Mo my old house. One street over, a house much smaller than mine, completely dated, just sold for about 10% less than I sold in my house for, same day.
Less or more, you're saying?
10% less than but my house is bigger, has a lot
I
more
see.
to it, and is newer, and it's sold in one day for full ask price.
And when you say one street within the development.
Within the
not
development.
Like outside of the development.
Within the development.
Yeah.
Literally, we pass this house every single time.
Yeah.
And you saw the pictures of the inside. Did you see it? It's so dated. Somebody needs to go in there and put $500,000 in the house.
So for new home viewers who are watching and they just got in this house, should they be?
If you plan on being in your house for a long period of time, when I say long period of time, 10 or 20 years, you should probably be okay. Just remember, markets, just like real estate, yes, everybody needs a home, but those can get crazy too. 06, 07, everybody's theory was nationwide prices have never gone down as a whole. Look at Schiller. He just showed 28% drop from that peak to the bottom. That's a big drop. Prices, and by the way, everybody used to be able to rely day in and day out 3 or 4% growth in their value of their home. Absolutely. By the way, in his book, Irrational Exuberance, he talks about the two most consistent markets in the country for real estate growth, Cleveland and Milwaukee. Would you have ever guessed Cleveland and Milwaukee?
No.
Never.
Of course not. You'd have been like, oh, because it's consistent. They don't have the big fluctuations. Why? They're less sexy. People aren't moving there in droves. Cleveland's population has been the same for 20 years, right? Milwaukee's probably the same thing. When I say Cleveland, I don't mean the city of, I mean the metropolitan area. 2.5 million people or whatever the number is, 2.3. It's pretty much the same population it was 20 years ago. But because of that, there's less overbuilding. Because remember, guys, you can't forget, in these hot markets, it's very easy to go right down the street and build more houses.
Tons of development. I mean, if you go I'm thinking of Tampa and Orlando. It's incredible
Yeah.
how much they're building there.
So just remember about that. When people say like, oh, it's all about demand, it's all about population increase. Okay, let's say you have 10 people here and it goes to 20. But you also have 10 houses here, it goes to 20. You're matching demand and supply.
Yep.
There's no change in prices. Now, let's say you all of a sudden build 30. This is what happened in the 06, 07. Oversupply. What happens to pricing when there's oversupply? Prices take. In an economy like Cleveland, 10 houses needed, now they need 10 houses. Still the same number. What happens to prices? Stays the same. It's just, guys, it's supply and demand. So whenever somebody tells you it's all about demand, they are just very, very stupid. And here's the good news. I've been on panels with self-professed billionaires who say the exact same thing about what you're probably thinking. Everybody makes this mistake. It's about supply and demand, not just demand. In markets like Atlanta, Dallas, Fort Worth, Houston, where they can just keep going out and out and out and out, it's very hard. Look at Columbus. Columbus is growing like crazy.
Yeah.
You don't see home prices in Columbus over long periods of time skyrocketing, right? So I always urge you, if you're going to be in your house for a long period of time, it's okay to overpay. If you really want that house and you're going to be there for a long time, if you want it, go do it. But if you're looking at it as a 2 or 3 year long live, I just sit there and say, just rent. I'm a big believer in renting. You have the flexibility of just saying, I'm done. See you later until you find where you're going to live. Right? My sister-in-law's brother lived in Cleveland for 2 or 3 years. He bought a house. He did well on it because he moved to Cleveland like 2011 or 12.
Yeah.
Was here for residency we have a mutual friend who worked with them 2 or 3 years. Great, he made money. Move on. But if I were him, I'd have just rented. Why buy? If I were an athlete and I was living in a city, I got drafted, I'd rent. Making $10 million a year, I'd still rent. Why? Because why go deal with the hassle? Just give the keys back and go. Right? So it all depends on your situation. It all depends on where you are in your life, etc.
I see a lot of couples trying to weather the storm. They're moving in with parents. They are renting. They're in places they're not in love with. They have to, right?
Yeah, because the market's too crazy right now.
Yeah.
I mean, you have to bid over ask to get a house. And if you're in Tim's situation where he can get a house he loves that needs a lot of work, but then he can have value in it because of it, what the heck? By the way, you know what the great thing is? The one benefit to the housing market is inflation. Inflation will help you in the housing market. Right now, Tim buying a 2,600 square foot house. He called a friend of his who's a builder and said, how much would it cost me to build his house today? He goes, $500,000 all day. Tim's paying $340,000 for that house, including the land. That's $500,000 not including land.
Yeah.
Right, Tim? So Tim's getting a deal in that sense where he goes, listen, if I were to build, that's the great thing about cost of building going up. It's going to drive the prices of existing units. So because of inflation and how fast it's growing, we might not have a housing problem. Especially also if you're younger and you're early in your career and you have a lot of income potential to grow, you can afford to make a mistake on buying your home. I'm not telling you to do it on purpose, but if you make $75,000 now and your potential is $200,000 or $300,000 in the next 10 years, you can go afford to buy a $200,000, $250,000 house now, and in 10 years, if it's still worth that same amount, you take a little bit of a hit, you're making enough money to sell it. So there's so many factors involved, but if you believe that buying a home at these levels is going to be the bottom of what you're going to see in the future, I don't know that's the case. It could very well be the case, but we've had too much growth. It's too exciting of a market. Let me put it this way. I have too many friends on LinkedIn and Facebook who are realtors who brag about how they sold the house at record time because they are a great realtor.
With cell phone photos of the house.
I'm sorry. Yes. It's just like investing. There's no possible way that every single person in the world is a great investor. There's no possible way that every single realtor I know is a great investor. But then when the market crashes, what do? They blame the market. Guys, it's the market. The market's doing great. If you want to fight in it, go for it. But to me, it's okay to rent. It's quite all right to rent. Just hold your horses, and there'll be a better time to buy probably in the future relative to income. Prices can still go up even though the ratios stay the same.
That's our take on the current housing market. We'll update you as always. Paul is an owner of currently about 600 units of real estate that he rents out. It has been upwards of 1,000, and you're always looking, Paul, making deals. Andrew's upstairs looking at deals every single day. So this is obviously very near and dear to our heart here at Everything Money, and we'll keep you informed with our thoughts. That's our take. Fondle the thumbs up, and we'll see you on the live streams Tuesdays at 1 and Mo in the morning, 9 a.m. He talks about trading. Thanks, guys. Appreciate it.